All right, today we're diving into one of the most head-scratching earnings reactions of the entire season. We're talking about Amphenol's fourth quarter. You see, the company put up what looked like an absolutely spectacular quarter, but the market's reaction, well, to put it mildly, it was brutal. This is the story of the great disconnect.
So here's how we're going to break it down. We'll start with the earnings paradox itself. Then we'll unpack that really incredible record quarter. After that, we'll walk through management's super bullish case and then contrast that with the market's, surprisingly bearish verdict. And we'll wrap it all up with our prediction for what happens next. Let's get right into it.
Okay, so let's set the stage. On paper, this was a classic blowout quarter. Amphenol beat revenue expectations. They beat their earnings per share numbers. And then, to top it all off, they raised their guidance for the next quarter. A beat and raise is pretty much the gold standard for an earnings report. So the big question is, how did the market react to all this fantastic news?
Well, it reacted like this. The stock got crushed, dropping over 12% on the day. Just an absolute bloodbath that seems to make zero sense when you just look at the headlines. So what on earth happened here? And that's the central mystery we're going to solve today. How can a company that is firing on all cylinders, posting record results and guiding higher, still get punished so badly by investors? To figure that out, we've got to dig a lot deeper than the headlines.
Okay, so let's start with the numbers themselves, because honestly, they are truly impressive, and they really show a company that's at the absolute top of its game, especially in the red-hot AI space.
Just look at how strong this quarter was. Revenue wasn't just up a little bit, it was up almost 50% compared to last year. Adjusted earnings per share, an incredible 76% jump. And profitability, which we measure by operating margin, it expanded by over 500 basis points. That is a massive leap. But the really critical number here is the book-to-bill ratio of 1.31. That means for every dollar of product they shipped out the door, they booked $1.31 in new orders. That's a record high, and it signals huge demand coming down the pike.
And it didn't stop there. Looking ahead to the next quarter, management guided for revenue to grow another 43 to 45%, and for earnings to jump another 44 to 48%. They were really clear that the engine behind all this is the huge demand from AI. And they also noted that the guidance includes a pretty hefty chunk of sales from their massive new acquisition of CommScope. So from every angle you look at it, things looked amazing.
So with numbers like that, you can bet management was feeling pretty good. On the earnings call, their tone was just celebratory. They were painting a picture of a company executing perfectly and just cashing in on the biggest trend in tech right now.
The CEO, Adam Norwitt, he put the whole AI story front and center. He pointed to a staggering $8.4 billion in new orders, and he directly linked it to the build-out of AI data centers. His message couldn't have been clearer. This demand is real, it's enormous, and Amphenol is right there capturing it.
Management also spent a ton of time talking about their huge new CommScope acquisition, and this deal is a really big strategic move. See, for a while now, one of the worries for investors was that Amphenol was mostly a player in copper interconnects, in a world that's quickly moving to fiber optics for AI. Well, this deal tackles that concern head-on. It makes them a total solution provider in both copper and fiber, and it's going to add over $4 billion in new sales.
And Norwitt really hammered this point home. He described the deal as something that vaults them into a leadership position in fiber optics. So from management's view, they just delivered a record quarter, guided strong, and made a game-changing strategic acquisition. So what gives? This brings us to the other side of the story, the market's perspective. Because while the Q4 numbers were backward-looking and the guidance was for the next 90 days, Wall Street is always asking, that's great, but what have you done for me lately? And more importantly, what will you do for me next year? And folks, this slide right here is probably the single most important piece of the puzzle for understanding that sell-off. Context is absolutely everything. In the year leading up to this report, Amphenol stock had already rocketed up almost 112%. It had just demolished the broader market and its industrial peers. So expectations weren't just high, they were, well, stratospheric.
So the crucial thing to understand is that investors weren't really reacting to the great Q4 results. They were already looking past them. After a run like that, the question on everyone's mind becomes, how in the world can you keep this up? Is this as good as it gets?
And these were the fears that were likely driving that big sell-off. First, There was this belief that maybe the stock had just gotten ahead of itself and all that good news was already baked into the price. Second, there were serious questions about whether this incredible AI growth could actually be sustained. Third, there's always the risk that integrating a huge company like CommScope could get messy and hurt their profit margins. And finally, it might have just been a simple excuse for people to take some profits on a stock that had already given them monster returns.
So after weighing management's incredibly bullish case against the market's pretty deep skepticism, we come to our final section. Here's our take on what's next for Amphenol and what we'll be watching for on their next earnings call.
But first, a really quick definition. When we use the term market perform, we're not saying sell the stock, and we're not saying you should be buying it hand over fist. We're suggesting that after its massive run-up, the stock is probably going to perform more in line with the overall market for a while, as it kind of digests those huge gains.
So with that in mind, our call on Amphenol is market perform, and we have a price target of $150. Look, we believe this company is a phenomenal operator, but right now the valuation reflects a huge amount of optimism. The stock probably needs some time to consolidate and basically grow into that higher valuation before it's ready for its next major leg up.
So here are the key things we'll be watching for. First, can the company actually deliver on that very strong Q1 guidance? Any sign of weakness there will get punished, for sure. Second, how is that huge CommScope integration going? Investors are going to want to see proof that it's actually boosting profitability, not dragging it down. And finally, we need to get some more clarity on the costs related to that acquisition to make sure they're just temporary noise like management says.
And that really leaves us with the ultimate question for any investor looking at Amphenol today. Was this 12% drop just a healthy, maybe even necessary, pullback for a stock that had simply run too far too fast? Or was it a massive overreaction, creating a rare chance to buy into one of the most critical suppliers for the entire AI revolution at a nice discount? Well, the next few quarters are going to tell the tale.
This is not financial advice.